We are in chapter 9, the end of the semester. Look, I don't know about you, but this semester has worn me out. It's a good tired though, because we are learning some valuable information that will be an immediate benefit for your employer and for your future career as an accountant. So please forgive my casual attire. I was a little too tired to put on a tie or even shave. This last chapter focuses on payroll. And I'm sure you are all familiar with how payroll taxes work, at least at a high level, right? So let's say that I'm working for you at a job that's making $20 an hour and I worked 40 hours. Then I would earn $800. Now, earn is the important word here. Even though I earned $800, my paycheck will be something less than $800. And that's because of the deductions from my paycheck. Now, the biggest and involuntary deduction is taxes. So as an employee, I'm required to pay taxes based on the amount of income I earn to the federal government and the state government, unless I lived in a state like Nevada or Florida, who do not have state income taxes. Additionally, I also have to pay Social Security and Medicare taxes. Now, those taxes are not directly tied to the amount of income that I earn. So for example, for every dollar that I earn, I'm required to pay 6.2% to the federal government for Social Security taxes. That's also known as FICA, F-I-C-A. Now, as an employee, I'm going to pay 6.2% of the first $127,000 that I earn. Afterwards, there is no additional tax due for FICA. So in a sense, this disproportionately affects the middle and low class who are earning less than $127,000 per year. In addition to the FICA taxes, employees also have to pay 1.45% for Medicare taxes. Now, this tax does not have an income limit. So to recap, for every dollar that I earn, the government will want about 8 cents of that dollar. So I'm paying income, and then I'm going to have to pay income taxes on the other 92 cents. There are other deductions as well: medical and dental benefits, retirement, charitable contributions, union dues, if there's an employer provided life insurance, wage garnishments. Now, this is all the stuff that I would see as an employee and that you have probably seen as an employee. But let's talk about what the company, your employer, sees and does, right? So let's go back to the example. I'm your employee and I earn $20 an hour. I work 40 hours, so that means that you owe me $800. Now, first, the federal government requires that you, as an employer, have to withhold federal and state taxes from my earnings. So even though you owe me $800, which is an expense or cost to your business, you will only pay me about $600, which is initially a liability, but ultimately a reduction in your cash. So what happens to the other $200? Well, this is initially recorded as taxes payable, a liability account. Now, the reason this is a liability is because you, the company, kept $200 of me, the employee, my money that I earned. And you're saying, hey, sorry, but I have to give this to the government. When you file a tax return at the end of the year, maybe they'll give you some back, right? So that's the way that the United States government has set it up. So every time that I make money as an employee, my employer has to withhold a certain amount of money from my paycheck. Now, eventually, the government expects to receive this money. Actually, they're paid around twice a month, but the actual payment schedule depends on how big the company is and how much their salary expenses are. For federal purposes, they're also required to complete a form called Form 941 on a quarterly basis. In the state of California, they also have to fill out a form for the state taxes that are withheld and then paid to the state government. That's called a DE-88 form. I should also add that an employer has another responsibility. Now, as an employer, they agree to share the tax liability. So what that means is, remember the discussion about the 6.2% of every dollar earned is for Social Security and 1.45% of every dollar earned is for Medicare. Well, actually, 12.4 of every dollar earned is for Social Security, and 2.9% of every dollar earned is for Medicare. So if you put this all together, the government is getting about 15 cents for every dollar that I earn, that you earn. Okay. But here's the good part. When you're an employee, the employer agrees to pay half of your FICA and your Medicare taxes. So back to this example. You're the employer. You're paying me $20 an hour, and I work 40 hours. Well, your salary costs are $800 because that's what you owe me, even though you're withholding some of that money for taxes that I have to pay. But you also have an additional cost. You have a payroll tax expense for about $64. How did I get that $64? 6.2% of $800 and 1.45% of Medicare. So as an employer, you would have a total expense of $864. $800 in salary expense and $64 in what's called payroll tax expense. So if you're not an employee but still earning money, say like an independent contractor, then you are required to pay for the total amount of taxes, right? So you're paying 12.4% for Social Security, and you're also paying 2.9% for Medicare, in addition to your federal and state income taxes. Quite a somber way to end the semester, huh? Don't worry about it. You'll be making a whole lot of money as an accountant, and you can afford to pay this 15% or 8%. Now back to the actual work you're going to be doing. In this chapter, we will not be using the Beach Barker Company. Instead, we'll use a test drive company to perform all the payroll activities. Now, I do want to say that the tax rates and forms are always changing. So what you will see in your textbook is going to be slightly different from what you're going to see when you are going through and practicing this work, right? So you will see some slight differences. Don't be too concerned about that. I also want to add that most of the features that you're learning in this particular chapter is not a standard feature on QuickBooks. So throughout the semester, we've been learning a lot about the standard features on QuickBooks Online. The payroll feature is an additional cost, right? I think it's based on the number of employees that you have. You just pay an add-on cost. But depending on how a company wants to run its business, they're either going to pay for payroll to do that work for them, or pay for QuickBooks to do that work for them, or they'll just go and get it done using a payroll tax provider like ADP or Paychex or something like that. All right, it has been a pleasure. You know how I'm going to end this. If you have any questions, Chapter 9, ask a question. Thanks a lot.